Bureau 2.0, delivering valuable partnerships to the banking sector. Before I just go into it, the word bureau keeps turning up, but I don't think it really applies to you at all. I mean, when I was first looking into what TransUnion was, and everyone kept telling me it's a bureau, I don't think it's a bureau. I think it's a data, algorithmic, behavioral, I don't know what we call it, but it's certainly not, I would not call it a bureau. So we're going to have Chad Reimer, who's the Senior Director at TransUnion Africa, and Billy Owino, the CEO, and my friend at TransUnion here in Kenya. They're going to speak about the fact that TransUnion is more than a credit bureau. We aren't just an overhead, we're an integrated risk information solutions provider. Gentlemen.
As the CEO for TransUnion Kenya, I think also let me take this opportunity to welcome you all officially. Really excited about the opportunity to speak to you today. And as we start, I just want to set the stage by planting a seed or putting a thought out there. Kind of just like to build on what Lee has talked about. Yeah? We're saying, you know, we're in the days of consumer first era. There's a lot of information coming to our consumers. They've got a lot more choices. I kind of just like to paint a picture. In my previous life, before TransUnion, I was in the smartphone industry. And one very interesting statistic or fact that you might know about a smartphone today. Now, we know about the Apollo 11 mission to the moon, yeah? And it was powered by the Apollo guidance computer. It was called the Apollo guidance computer. Who can guess how powerful that computer was in terms of processing power? Any guesses? You can shout a number. Your smartphone is operating at what, 4 GB, 6 GB? Mine is 6 GB because it's Android. Lee's is 4 GB because it's an iPhone. But who can make a guess? The computer that guided the rocket up to the moon, 365,000 kilometers. So we had 1 GB. 10 MB. 10 MB. I'm saying one. It was actually 63 KB. Yes. That was the Apollo guidance computer that went to the moon. Now, to put it in perspective, it means therefore today that the smartphones that you are holding today, that your customers are holding today, are 120 million times faster in terms of processing power than that computer. You can simultaneously send 120 million rockets or get them to the moon. That's how powerful it is, yeah? Quite amazing, yeah? But what does it mean? It means that our customers today, the consumers you're talking to, things are changing, yeah? Information is really coming to them at a faster pace. They have more choices. They're able to explore more choices every single day. And the information that keeps on coming through, they're also generating interesting data. So it's not all lost in terms of, you know, are you keeping pace with how fast they're moving in terms of the information they are generating or accessing, but also there's the interesting data they're generating that for your digital strategies can actually become quite interesting, yeah? And that's really where we play. I know a lot of you, when you hear TransUnion or CRB, I think we still call CRB in a lot of the conversations, you think credit report, isn't it? You think blacklisting. At least consumers do think blacklisting, isn't it? Yeah. But if we told you today that we are able to not just have conversations with you at the bank, at the policy level, regulatory level, at the credit level, but also at the CEO's office, the C-suite, the sales manager. We actually have something to offer the sales manager, everyday conversations and solutions. Yeah, and that's really TransUnion. That's so the next probably half an hour or so, that's the story. That's the information I want to put out there to you is really what is this transformation that has happened over the years within us? What are we bringing to the table? And really, what are these conversations that we want to have with you? We started with some of the banks already. around what are these insights that I can bring to the table? What can I show you? Yeah. If we are sitting with, for example, the director of retail at a bank, do I have the ability to point you to another addressable market of another 10 billion that you can book? Yes, I can. Yeah? And we'll show you how we do that. Yeah. So very interesting. So let me just jump into it. I've touched on that. You know what we've always known the bureau to be. It's blacklisting. It's a data provider. It's regulatory purposes. I need to send those reports monthly to CBK. Show that I've used that data. And in most cases, we've always been looked at as a vendor, yeah? We are an overhead to most of you, isn't it? That's how we are looked at. Because I think, this is my, 15th month now at TransUnion, coming from the IT industry. And when we came in, started having conversations with the banks, the interesting thing, or the running theme around these engagements has always been around price, yeah? Why are you charging me X amount for a report or a bureau check? Yeah? Because that's how you look at us. You know, we're more of a vendor to you. Yeah. But we want to change that conversation and really change the relationships in terms of how we work with you, and be value-based in terms of how we really deliver our solutions to you. Yeah. And if you put out there really what does that mean today? It's a value creator, growth-oriented. I know that's something that really at the top of your minds today. You know, where can we grow? Yeah, we know the regulatory regime has not been so kind to you in the last probably 18 months or so. And there's really been a lot of focus in terms of how can I be smarter in terms of how I grow, and it's across. Yeah. When you're looking at your traditional products, personal loans, vehicle asset finance, or even you look at digital, yeah, you know, how can I be smarter in terms of how I grow, yeah? And that's really what we as TransUnion are all about, and the value that we bring. Lee kind of talked about it a little bit in terms of what's this digital transformation that's happening and how we play there. So I just want to bring it home in terms of what are these key areas. And we're going to focus on about 4 areas that we think would be really interesting to you in terms of how we bring value to the table as our partners in the financial industry. Yeah? So I'll hand over to Chad to kind of just like start diving into it. And it's really, you know, what are these areas? What's this we're trying to do, and what relevance is it to you? And there's quite a bit, you know, the challenge you have as TransUnion is that because you're a data company, information company, we tend to have a lot of insights out there, but we've narrowed it down to 4 key areas which, you know, when you're having those conversations at the C-suite or your strategy sessions, we think would really, really be relevant to you today, and stuff that we'd like to have conversations on going forward. Yeah? So I'll hand over to Chad, who'll kind of like give a highlight of some of these areas before I come back to wind up. Yeah?
Cool, thank you, Billy. My name's Chad Reimer. I've been with TransUnion for 3 years. Come from a consulting background in the banking space. And I think it's interesting just to sort of pause and say, why did I join TransUnion? Because I didn't join to be part of a credit bureau. I didn't join to hand out consumer reports. I joined because when I was consulting to banks, whether in a couple of different countries, we were often consulting on a theoretical basis. So we'd come up with a problem or agree a problem and then come up with a solution, working with some of the global IP from a consulting background. But what we didn't have is the data. And we'd often say, if we had the data, we could really solve this problem. And that's what I saw in the value of TransUnion. And that's actually what we're trying to do as TransUnion, is use that data, those insights, to really achieve outcomes for our clients. So I've been with TransUnion for about nearly 3 years, and I was in a strategy role. And part of that role allowed me to engage with the 33 countries we operate in globally. So we operate in primarily emerging markets. So these markets face similar challenges to Kenya and East Africa generally. And one of the great things about my role was I was able to work with my international colleagues, whether in India or Philippines or Colombia, and really understand the challenges that they were facing and how we as TransUnion can solve them. And we want to focus on a couple case studies today to see how we can perhaps look at some of these problems in the Kenya context. So I've been in this role for the last 6 months. My role is to, on behalf of Lee, take some of the global IP, the South African IP, up to the rest of the continent and really try and solve some of these unique problems that we have. So the first game-changing problem that we're going to look at is sort of leveraging what Lee spoke about, which is how do we grow this population that we can look at. So in Kenya, 44 million population. Of that, we know that about 5 million are credit active in the formal sense, that traditional sense of credit active. And we know that there's about 6 million additional people who have entered the space in the last 2 or 3 years through the mobile lending. But we don't know as much about them. In addition, Lee spoke about a couple of examples in the US, in Colombia, how we use alternative data and alternative methods to really understand the consumer more. So I just wanted to touch on a South African case study. It's a case study, yes, that's from South Africa, but we believe we've seen it in Hong Kong, we've seen it in Colombia. We believe it can apply to the Kenya market as well. There's about 32 million economically active consumers in South Africa, and that's despite our high unemployment rate. But credit active, there's only 24 million. So right there, you can see the difference in the bar graphs. There's about 8 million people that credit providers don't know much about. In good standing, it's only 11.5. Now, this is really interesting because you've got less than half your credit active consumers are good credit risk for a credit provider. And then obviously the balance is in arrears, are delinquents, and generally don't get the access to credit. So we see a couple of challenges. Number one, the gap between the 32 million and the 24 million is an opportunity. We don't know much about them, but how can we know more about them? So for example, applying that to the Kenya context, how can we use this new alternative data that we have, whether it's mobile loans or other sources that we as TransUnion are pursuing, to really focus on that gap of 8 million. But in addition, in this 12 million who, normally to the point of Lee speaking about that individual who wrote us a letter, how can we know more about him? This is money being left on the table if we understand the customers and understand the risk in the right way. So our philosophy is that not only can we help you lend to the same people, but we can help you lend to new markets, both who are totally new as well as who are rehabilitated. And how do we do this? We do this through some of our models, our analytics, and our alternative data. So before I move on, you'll see on your desks a solution overview that we have. We've launched this to really help you understand, what are some of those solutions that we can work with across the consumer life cycle. So Billy will talk a little bit more about how we look at the consumer life cycle. And I think the key thing is, when I took over this role, and I looked at the revenue model, as any new incumbent would look at, how do we make our money? All I saw was consumer reports. Now, if I apply that to any of our other markets around the world, we see analytics, consulting, growth-orientated projects. And that's what we really want to pull through from our solution overview, is that we can solve problems, multiple problems across the life cycle in very unique ways with our unique capabilities, such as data, our technology, our decisioning technology, as well as our analytical capabilities. So that's your gift to take away. And we're happy as a TransUnion Kenya team with Wangechi and Pasqualina in the room to talk to you more about some of these solutions. But I think the point is, if we're going to solve problems like we just showed, we need to be able to bring more value through solutions and through trying to create more value for you. And this is the next item I wanted to talk about, is financially empowering consumers. So how do we make consumers empowered and in charge of their own destiny and their own credit worthiness? Now, in the room, are many of you familiar with the Discovery Vitality model? Is that understood well in Kenya? No? Okay. So the Discovery Vitality model, it's a health insurance model that originated in South Africa and has now gone global. If there's any Manchester United fans in the room, you'll see at Old Trafford around the ground, Vitality. So if you didn't know what Vitality is, I'll do the marketing for Discovery. I'm not getting paid for that. But so what Discovery have done is they've launched this model to empower consumers from a health insurance point of view to be in charge of their own health choices and their own activities. So what they do is they give you a watch that tracks, with all the GPS exercise sort of things. It encourages you to go to the gym. It encourages to eat healthy by partnering with supermarkets and encouraging and giving you discounts on healthy food choices. So all of this is done to keep you healthy. It's the total alternative of what a health insurance model has traditionally been. And they've now rolled this model out to many countries around the world as a branded sort of white label solution. Now, how do we translate that into the credit context? So one thing we can do is help empower consumers by understanding their credits a lot better. Now, hopefully, a lot of you have heard about our product called Napashi. Napashi, Inform Me, is a way to put the information, the credit information, in your own hands, in your consumer's hands. And this means you can download your credit report, your credit score, your clearance certificate via an app or an SMS-based interaction, which is better than having to walk down or catch a taxi and spend money to go to your office, to the credit bureau office to receive this. So what we've seen is that, the problem is that we've got this increasing market of credit active people in the mobile loan space in particular. Obviously, you guys know we're highly penetrated in the mobile space, but there's limited credit awareness and the financial literacy. So how do we bridge that gap? And how do we leverage that mobile penetration to mean it's not necessary to walk or catch a taxi to be informed about your own credit history? So, and obviously with the high rural population, that becomes an issue as well. So we launched Napashi in 2015, a world first, okay? So we've got some international colleagues here. In 33 countries, this was a world first solution. In Kenya, of course, where digital is everything. So in 2015, we launched an SMS-based way to interact with the consumer records, and in 2017, we relaunched it as an app. We've integrated with some banking clients and they're looking to partner. But this goes to Lee's point earlier about how do we do the right thing by our consumers? How do we empower our consumers? How do we win the hearts and minds of our consumers? Now, when we talk to regulators are saying to us, how do we shift the perception of the credit bureau in the hearts, in the minds of consumers? And for me, it's very similar to that Vitality health model, is that we need to be in control of our own destiny, and we need to help yourselves as our clients and as our partners to reach that consumer market. So and the other great thing here is that, again, world first solutions in Kenya has now been exported to other markets. We've exported to Rwanda. Rwanda has now launched their sort of sister solution. And in fact, we've got colleagues from around the world now coming to us and saying, how can we launch this in Canada or Hong Kong and other places like that? Now, why do you guys care? It's not just about the hearts and minds. So I want to go through a case study of how this can help you from a business point of view. So by empowering consumers, we've proved in many markets that this helps attract new customers and attract the right customers for your needs. So it's a win for yourselves, the credit providers, it's a win for consumers, and it's a win for society. So I'll just take you through a quick case study of what we've seen in terms of, on the right-hand side, in the yellow, active credit monitoring, in the blue, some credit monitoring, and in the grey, no credit monitoring. So you'll see on the far right, for example, that in this case study, of consumers who opened credit accounts, 51% were those who actively monitored their credits. That's a good thing. That means it's a growth opportunity. If you can encourage your consumers to actively monitor the credit, you're going to more likely be able to cross-sell opportunities for them. The middle one, a little bit difficult to see, it's in the pack as well, is how has a consumer score shifted over 12 months? Has it gone up by 0 points, 20 points, up to 100 points? And as you can see, people in yellow, the people who actively monitor their credit, their score goes up. They become a better risk. They become a better prospect for you. So that's some of the insights that we've seen in other countries. It's worked, it happens in every country. It's similar to that Vitality model, I guess, that if you're in control of something that's very personal to you, then you're going to look after it, you're going to make sure it's good, you're going to make sure it's clean, and as a result of that, you become a better prospect to businesses as well. So that's why it's really important that we see a consumer element here, obviously, but we also see a business imperative as well. So with that, that's two of the key problems we've looked at, and Billy's going to follow up on the two next problems that we really want to solve for Kenya. So thank you very much.
Kind of like to drive home Chad's point around consumer empowerment. You know, it's one thing that we all appreciate. We still don't check our credit reports or monitor our scores as a habit, isn't it? It's always a grudge engagement, if you want to call it that. Yeah. How many people check their credit reports annually? All right. Decide. Wow. So did you guys select yourselves on where you sat? Yeah, so small percentage, and it's actually really true. Yeah, but a lot of people don't even know that the law entitles you to one free credit report annually. Yeah, that you can look at. The beauty about Nipashe that Chad didn't talk about is so we've taken away that whole having to go to a credit bureau to look at what your report looks like, but not, over and above that, there's alerts that free alerts that we built in. That really starts to put this information right at the hands of your consumers. Yeah, one that I really think is very important, especially in our context today, is alerts whenever a loan is taken against your details, your ID number in this case. Yeah, and why am I saying that is important? Because we've seen all innovation around fintech space and mobile loans. Unfortunately. One thing that we've also seen rise is cases of fraud when it comes to mobile loans. Yeah, loans being taken against your details that you didn't know about, or sometimes it's loans. This classic example of a gentleman I met at the airport one time when I was flying, and he says he has a negative listing, but it's a SIM card that he bought for his mother back in the village. Yeah? But mother lives with a sister who, of course, is savvy, managed to get into her M-Pesa account, M-Shwari, took a loan. Mother didn't know about, yeah? But the guy who was negatively listed was, of course, this gentleman. Yeah? Those black books, the visitors' books that you sign on when you get into buildings are being mined at the moment. Those details are being taken and somehow they're being used to register SIM cards, yeah? And take loans. So it's really important. So it gives you alerts, whenever a facility has been taken against your name, or if your score has changed. And as Chad says, we might talk about it here, but it's really going all the way down to these consumers that you're targeting. So those who are new to bank, new to credit, this view of them getting into this habit, and there's about 6 million of them already who we have visibility of, that we can show you who are actively doing this. They're looking at their credit, but also what their behaviors are. Yeah? And so with that, I can pivot into the next item that I want to talk about. Now, when you bring it back home to the banks, if you look at the whole credit cycle, a lot of the engagements with you has more been at the initial stages, yeah? At the point where you're engaging the customer, signing up a new account, or it's origination for a new loan, yeah? And that's been working, and we're going to continue, enhancing that. We had a meeting with the governor yesterday, and of course, he challenged us to ensure that that's working better. And as an industry, we are addressing it. The other thing that, of course, we'll be addressing, and Jared is here from CIS Kenya, is drive consumer awareness, yeah? Because when we drive that, of course, we are building that funnel and base of, credit type consumers who are building better credit history and make them really more attractive to you. Yeah? And we'll be sharing some of these initiatives around consumer awareness that as an industry we'll be driving. And it's really around ensuring that that funnel keeps on building up for you. Yeah? One statistic I wanted to share with you is today we have about 10 million individual profiles at the Bureau that we have a view of. Just over 50% of that, of course, is digital credit, mobile borrowers. But the interesting statistic has been that the number of those who are negatively listed over the last 2 years has dropped from about 26% of the total profiles to just about 11.7%. Yeah, so more and more consumers are building better credit histories, which is really about you can have a better visibility of these consumers as you build your strategy by using or accessing the data that we have. Yeah, but I want to talk about on the third pillar, which is more around the account management bit of it. Yeah, so what the customers you have on board. Let's say you're Bank A, you've got 5 million customers. The interesting discussions that we can have and we are having already with some of you is around, out of these 5 million consumers or customers of mine, what's my share of wallet? Yeah. And if you look at a lot of investments, at least, the last 1 year, at TransUnion, we're not investing in people who can tell better credit reports. It's been on infrastructure, it's been on analytics, it's on data scientists, yeah? And it's because these are the insights we want to build. And I'll give you a classic example. So if you talk about Bank A has about 5 million customers. Out of these 5 million customers, maybe they're the leader in personal loans, yeah? With bookings of, let's say, another 2 billion or 3 billion Kenya shillings in personal loans. Yeah. Now, one thing that we can do as TransUnion is really come back to you and give you a view of those customers. So these same customers of yours, 5 million customers, you've got a share of bookings worth. Okay, let's be more generous here. Let's say 100 billion shillings in personal loans. Yeah, but these same customers of yours could be having the same facilities out there when it comes to personal loans, totaling maybe another 100 billion or so. Yeah? So we are able to then drill down and figure out for you, what's your share of your consumers? What do you have with them in terms of facilities? But these same customers of yours, what are the facilities they have there, out there that can help you now build your strategies? The product guys, beta retail director, sit back in the strategy rooms and kind of like start crunching the insights that we put out there around what are the cross-sell and upsell opportunities that then I can have or I can build around personal loans with the view that, well, I thought I was doing well with my customers, for example, in personal loans, but I'm realizing that they've got another almost 50% out there that I could go for. So is it a case of my lending policies? Is it a case of the limits that I'm offering? Or could it be a case of I'm not lending to them because I feel they're already stretched, but someone else is more willing to go for them? And you start drilling down deeper into these numbers. Teams would come, sit with you, and try and now start figuring out these addressable opportunities that you have out there. What can you really go for? Yeah? It's about mobile, for example. We know that not all of you have mobile solutions in terms of mobile lending or mobile loans solutions out there. But would you be able to, for example, go out and offer almost real-time opportunities around that product, leveraging what you have today or you don't have today because your customers are going out there to look for it? Yeah? A classic example is on asset finance. We've seen that in asset finance, and we have some insight that we'll show you later, the banks do well, but on average, your consumers tend to have between 2 and 3 same facilities on asset finance. Yeah? So you might have one, but this same person with other customers have another 2 or 3 asset finance facilities. Yeah. So what does that mean for you? Is it money off the table that you're leaving that we can give you sight of? Of course, we can give you sight of that, but not just about giving you sight of what these opportunities are for cross-sell and upsell for growth, but it's really coming in, sitting in with you weekly, could be on a monthly basis or whatever times are set up, and start going deeper and look at, so we've given you sight of maybe another 100 billion. How do you book it? What is the actuals that you can go for? Yeah? And how we do that is we score your customers in terms of how they're sitting out there in terms of a view, yeah? And being able to then help you figure out in terms of your strategies, do I want to go for the well scored, the ones with the good, low risk, and how many of those are there that are low risk that can be willing to buy, for example, the facilities, and how many, for example, are sitting maybe in the medium risk, who are there on the high risk, and then I can leave that, yeah? And we'll show you some of those insight around that space. And then on the final bit is, the insights around what next after account management, yeah? Decisioning and all that. You find that you also start monitoring your customers and trying to figure out how do I ensure that I'm retaining my best customers? But then again, in terms of risk management, how to ensure that I have sight of probably my customer who could be in distress and pre-delinquent, because that then becomes a very interesting data and trigger that we can make available for you, where you'd say, I can see how my customers are sitting, but you can see how they're behaving out there. Do they have a facility they've defaulted on out there? Do they have a facility that, for example, they're struggling to pay the monthly installments? Now that data, that insight then becomes very interesting in terms of your strategy, because then you want to go back and say, I want to monitor this customer because his activity on the other side seems to be putting him under distress. Yeah? And when it comes to collections, it's really around how do I get better at collecting? Yeah? If my collections team has about let's say, 1,000 NPLs to collect from, do I send this data to the call center and have them call from number 1 to 1,000? Or can I use better data to make me more efficient in terms of how I collect and say, out of these 1,000, let me just focus on these 20, because these are the ones that can really collect from the data that I'm seeing, and the other X amount that are out there, let me not even bother, yeah? And it's the kind of insights around that would really be, how do you prioritize your collections, yeah? How do I focus on Billy, who is delinquent with me today, but from the data that I'm getting from the Bureau Insight, I can see he's just finished off paying another loan out there, so maybe he has extra disposable income, yeah? He's performing very well with other lenders out there. How do I ensure that my collections or my installments that are in delinquency become a priority, yeah? And then kind of just like starts now informing how you could become more targeted in terms of your approach around collections, yeah? So these are really interesting stuff that we would want to talk more and more with you about. Of course, during the Q&As, if you have any questions around that, it would really be about, sorry, we don't have sound. Can I just check? Can I check it's on mute? Yeah, okay, all right, so the last one I wanted to leave you, and actually it's good it's paused there, is acquisition manager. So we've talked about all these things you can do around using better data insights to manage your customers across the whole life cycle. One that we really are excited about, that we'd want to have conversations with you going forward with the team, and we'll introduce them before we finish up, is our acquisition manager. Yeah? And acquisition manager is really us bringing automation and technology when it comes to decisioning on the bank's platform. Yeah? We've had feelers, we've sent feelers out about it out there in the market. Today we are finally talking about it across to all of you, because we are ready now to bring it to market. And in a nutshell, what acquisition manager does, let me give you a classic scenario. You've got your RM who has gone out there. He's, for example, you call them private banking, priority, I think premier. There's different names for some of your customers, how you segment them. And I'm in my office, and this RM has come to me because I'm looking for a new facility. Yeah. In most cases, they'll have a form that I need to fill. Of course, we have regulated, there's all the KYC. Some banks are trialing having all that data now sitting on an iPad. So they're able to punch in all my details, facility I'm looking for. However, that all goes back to the bank, yeah? Because there are all these decisioning rules that you have to build into it. I have to do my bureau check, I have to do the fast screening, I have to build in my rules around this loan application. And what's the average turnaround time in terms of getting that initial decision? Who's the fastest today? Let me hear them shout.
About 5 days.
5 days?
From the RM coming?
Yeah.
About 5 days.
Okay. That's from the customer side. Banks, who prides themselves in the fastest turnaround times? So is 5 days reasonable? Or is Ali Khan bluffing? What do you say? Is 5 days reasonable? More or less, yeah? What if you could turn that around in a day, or less than a day? Wouldn't that be disruptive in terms of just how you drive customer experience to the next level in terms of our customer first era, this customer first era, and how we talk to them? It's really quite amazing, yeah? So the acquisition manager really enables that, yeah? It automates all these tools right to our front end, and it can be a white label solution that sits at the forefront with, be it that RM guy who has an iPad with a bank-branded front end that captures all this data, automated, decisions are built in, bureau checks, and everything, and being able to turn around all that, including all the KYC in a day or even less, yeah? These are the stuff that we want to talk to you about. It's not just providing the reports, the bureau checks, but how do we help you automate? How do you help you take to the next level your customer experiences? Yeah? So we're very excited about it. We really look forward to that, and would really want to have more conversations around that.